In this video, guys, we're going to look at 7 things all top traders say that you should adopt. Stay tuned. Hey guys, warm welcome to you. Alright, so subscribe to the channel. Those of you guys who've watched plenty of my videos know that I love to study the great traders. If you want to be a great trader, you have got to look at the pattern that occurs across all the greats. Now, whoever you consider a great trader to be, and we're going to name any names here, but we know the ones I'm talking about, and I've done plenty of videos on each individual one of those as well. But if you want to emulate those, look for commonality. And so one of the things I like to do when I'm reading these books, when I'm listening to audibles, when I'm listening to interviews, all this kind of stuff, is look at the common things, write notes on the article and see, hey, very similar thing was said over here, very similar thing was said over here, etc., etc., etc. And so you start to build a list of, okay, yes, each trader has their own nuances, their own way they do things, their own way they trade. You know, you've got very famous trend traders. You've got other traders who are very good and their own words at picking tops and bottoms, but are no good at picking trends. So, and you've got day traders, you've got swing traders, and they'll have their own little way of doing it, but there's a commonality that runs between them. And if that is like the thread of success, if you like, for getting to 7, 8, 9 figures, then maybe we should try to adopt that so we can get to where we want to be a level of traders. Maybe we can remind ourselves, maybe you've got some of them already, but it's just reminding ourselves that these are so important, regardless of the style of strategy you're doing. It's so important to keep in the mind. All right, guys, number 1, never average losers. We know that Paul Tudor-Jones had that on his famous trader program, documentary, should I say. But everyone says it, you know, don't average into losers, don't average into losers, don't add, don't add, don't add. Different from a structured plan, but adding to losers just ends up in wiping out your account. Simple as that. Just have it as a rule and don't do it. I know sometimes you think, well, but sometimes if I just add here, you know, I'm not quite right in my first entry if I scale on this. Listen, if it's a plan, that's fine. However, if you're thinking that and you're adding on the fly, it's dangerous. But if you're thinking that as well, you need to say, listen, where's my last add? Put your limit in and walk away and learn to do that. Learn to get better at your entry rather than allowing it to scale in, scale in, scale in. Well, number 2, guys, focus on the risk first. This is the big thing. And a lot of you guys I know have transitioned from this. You're starting out trading, you're focusing on making that money. I'm going to make this, I'm going to make that in that trade, I'm going to make this, I'm going to make that. But you know that it becomes a case of, okay, focus on the risk first. How much am I going to lose in this deal? What's the risk on this trade? How is it correlated to this? Where's the hidden risk? All this kind of stuff. Focusing on that first, and then the profits will take care of themselves if the trade is right. And over time, if the strategy is good, then it will take care of themselves. It's focus on that risk. And all the traders, bar none, say that risk is the key. No trader ever who's got to 7 figures, 8 figures, 9 figures even, has said, yeah, it's all I focus on is how much I'm going to make on the trade. It's all I focus on. No one ever has said that. They've all said, hey, it's focused on how much I can risk on this trade. I need to be very careful. I need to protect my capital, because all the trades, no matter how good you are, will go wrong from time to time. It's the way it is. Right, number 3, guys, trade small when you're trading badly. Traders say this, hey, when I'm trading badly, I trade small. I scale down, I scale down, I scale down, I scale down. At a string of losers, a bad month, a bad quarter, a bad couple of days, whatever time frame you're trading, bang, right down the scale in terms of position sizing, 10th of the size, get back up, get back up. And that means that when they're on a streak and they're just not doing well, they're not damaging their account, Many beginner traders do the opposite. When they're trading badly, they scale up because they want to get the money back. And so as they're trading worse and they're out of sync with the market, they're trading the most size and they're doing the most damage to their account. The top guys are the ones who scale it back, know that it might take them some time, but then will scale back up as needed. All right, number 4, guys, find your unique style. The main thing, and I touched on this earlier, is that, hey, you've got your own style. You trade your own style. You find what works for you, what's comfortable for you, and you enjoy trading that way. Don't try and force someone else's style onto you. If you don't like it, trade your way. Yes, there's themes and commonalities between different styles and strategies, cutting losses and riding winners, etc., etc., etc. But find your unique style and trade it. Number 5, guys, don't copy others or act on tips. So this is a bit of a, maybe it's a bit of an interesting one, because I think that, and it makes perfect sense, many traders, all of the traders, they say, hey, it just never works. And even, okay, the thing is why I've act on tips here, because you've got one side of the coin, Jesse Livermore on tips. Then you've got the other side of the coin, other modern traders, if you like, saying, well, I can't trade when someone else has told me it's a great trade, or this is a strategy, or that's a strategy, because I don't feel that it's my trade. You don't have the conviction, and that's the key. People say, well, why can't you do it? Why can't you trade with someone suggesting a trade? Or why can't you trade if someone's making a trade call or a strategy or this or that, the other? It's because you don't have the conviction. If you don't believe the strategy is working and is effective, or if the market's going to go up or this is going to go down, or whatever the call may be, or tip or strategy or signal, you won't stick with it when the going gets tough, or you won't take every signal, or you won't do it. And that's what you need when you're sitting in a trade and it's not working out. Like, it's not working out. The guy who really believes in it, who's done the research, like, it is, I'm prepared to risk this money because I've done this, I'm going to sit with it, is the one who will make the money, and everyone else is like, oh, it's just been hanging around for days, I'm not interested, pull back, whatever it may be. So never ever follow people into trades, never copy people, never go on tips. Do your own homework, get your own conviction or not, as the case may be, and then stake your own capital on your conviction. All right, number 6, guys, be resilient. Super common theme, and it's a common theme, isn't it, guys? With that, if you're at any success, athletes, business, whatever, resilience, taking setbacks. You're going to get hammered in the face plenty of times. You're going to get hammered in the face, you're going to be knocked down, and the market is still going to keep hammering you, and it's who gets back up again and back up again and back up again. That's the key to it. And then you get a tolerance of level of, okay, it's not the same anymore. I'm still resilient, but you're not getting the knocks that you were getting when you're right in the early kind of years of your career. And even if you look at kind of some of the guys who have been in the business 30, 40 years, super successful, running huge funds, just generating lots and lots of returns for themselves and the investor. Even them, you know, they get knocked back, but they've developed that resilience to keep going, to keep moving forward, regardless of where they are monetarily and draw down or not. They just keep moving. All right, number 7, guys, a discipline is the key. We know this, everybody knows this. It's the one thing that every single trader who is up at the high level says has made them the trader they are. It's the discipline to do X. Some people might say it's to cut my losses. Some people might say it's to execute my plan. Some people might say it's to not get involved with markets. Some people say, whatever that discipline is, it's always that commonality, guys, of discipline, focus, and sticking to what you said you were going to do. So there's 7 things for you guys. 7 things all top traders say that you should adopt. Anything you have got to add, do it in the comment section below. Got an 8th, a 9th, or a 10th? I'd love to hear it. Take care, guys. Bye-bye.